Good morning everyone, welcome to the Euro trade on TopstepTV. My name is Deeyana Angelo, aka Market Stalker D. I've been trading for 18 years, specializing in commodities futures, so things like energy markets, natural gas, crude oil, RBOB, but also precious metals such as copper, platinum, and gold. So I am in a long crude oil trade. Like I said when I was on with Anne-Marie, these sorts of trades that come from large time frame demand areas tend to take a couple of days to set up. So what we're seeing on the 4-hour chart is that we have settled into a bit of a sideways movement. If I go to the daily chart, you'll see that there was a visit to the nearest daily demand where a lot of movement came from. So I'm willing to give this quite a wide berth to see if we can actually get some traction to the upside away from these levels. Yesterday we had crude oil inventories. They all showed increased firm demand for crude oil. So this whole drop was a bit of an overreaction. So we're going to see whether we can ride this back up today. I do need 65 to hold for that. 65 is a level where some calls are located, so we do not want price action to firmly hold below it. Having said that, on the intraday time frame, we do have a couple of things happening. So I'm going to mark the initial balance. This is the initial balance for London. This will obviously be different once we get into NYMEX, but for now we seem to have failed the auction to the downside. They tried to go lower and right now are attempting to crawl back above 65. So we'll see whether that holds. If it doesn't, it doesn't. That's fine. It is also Thursday. On Thursdays we have these bi-weekly crude oil option expiries that started getting introduced in July last year. So that sometimes leads, or quite frequently leads, to a single direction day on Thursdays in particular. Just statistically, that's what's been happening. But yeah, is crude oil back? Is it back? I can see that the New York session has climbed up in range up to 270, and the overall average daily range is back up to some historical norms of about 370. Now obviously that is heavily weighted because of all of these large moves that we had on the upside and the downside. So I don't know whether it's going to hold, but I'm willing to try. You know, I'm dipping my toes back into crude oil. Eek. It may not work, you know, it might just smack me in the face, and then we're going to be going to counseling yet again. But yeah, deep back to crude oil for a whole minute. So yeah, daily demand, failed auction upside, downside, so we'll see whether that yields any movement in the correct direction. If this goes lower, I probably don't want to get involved in this area, primarily because we have so many things going on. Having said that, we have gone into a value acceptance and almost rotated completely downwards. We have settlement from yesterday. That was around 64.90. And that's exactly where they tested it to. But the value acceptance for the London session at the very least is in progress. So I am trading against that. I'm very aware of that. 65.30 is where the value high for London yesterday was. So let's just put that marker. And the value low is at 64.70. if I look at NYMEX, it's actually a little higher than that, but not too dissimilar. So the value low is pretty much where settlement is, so 64.90 ballpark. And the value high is 65.55. So very, very similar to the London value, which is, you know, normal when you have a consolidation on the 4-hour chart like this. So yeah, basically looking at a accumulation turning into a markup. I've given it a couple of days to digest the 65 level. So far we're still sitting at 65, and that can be a pretty decent indicator that we might be due for a swing up. Obviously not always, it's got about 70%, but you know, any headline risk, any news that is maybe favorable to the war, and we will see this go even lower, which is something we can't control. But from a technical picture, this all looks pretty decent, and there's nothing else for me to do here. Just wait, sit on my hands, do not touch. What do I think about platinum today? I have no opinion on platinum today yet. It is still kind of inching higher, I suppose, but one thing I don't like about platinum is that it already kind of smashed through all of the options levels from the end of day. Typically when that happens, I struggle to read it well because it's like so high up, and you know, there's no levels for me to use as orientation. So I will probably be staying away from platinum today, maybe until like very, very late in the day. But platinum just rolled. I'm also not too keen on trading instruments that are in rollover, primarily because the volume tends to still be split between the old contract and the new contract. So until that's done, a whole bunch of weirdness can happen. You can also have things like huge days, but also days that go absolutely nowhere but have a pretty large range. Which one of those we're going to end up in, I don't know, but so far it's still pushing higher. Let's have a look at that monthly chart now on this new contract, and I do believe we have gone over the monthly high, which is now located at 1381.7. There is a small possibility that they go into a stop, run, and reverse moment. But in order for that to happen, we do need to come back below 1383. So that's the only thing I can see here. But options levels, we've pretty much run out of them. So to me, that's a very tough day. So I tend to stay away from that, especially in rollovers. So it's like, well. And yeah, I see Amanda saying HG also went higher. Yeah. But in a similar vein, we're kind of getting to the tops of the top of the ranges. So until we kind of establish some sort of structure somewhere, you know, either having, you know, initial balances or some sort of swings up and down, I tend to sit on my hands and wait. I know that, like, in theory, it seems like it should be, oh, an easy day, like just buy it. But I wish it was that easy. In fact, single direction days are the ones that are very responsible for people blowing up accounts, primarily because people get biased over what should happen, and then the price just relentlessly keeps going higher and higher, or lower and lower, and you're going, oh, how much further can it go? Well, more money than you have on the day, probably. So, and then you're like, all right, let me just go along with the trend. And somehow, just at the point where a trader decides to go with the trend, it tends to turn around and smack their stop loss, and then you're like, but, and then pulls back up. In that, like, I've seen that happen so many times. So yeah, for me, I don't like single direction days unless I've already identified them like a day before and I'm in on a swing, right? But if it's already on the way, I always struggle to find a decent way to limit risk and time that setup so that I'm not risking too much. Problem with platinum and the prop accounts is that there's no micros. So if you want to expand the stop loss, you have to do it on a full contract. So if you want to use, you know, an 80 tick stop just to kind of give it a lot of room, and even a 110 tick stop just to kind of make sure it doesn't whip you out, you have to have a pretty fat padded account before you can do that. And I think most people who are starting their journeys are either still in a combine or, you know, just kind of clawing their way to a few grand in the XFAs. So that's why I'm not in favor of telling people, yeah, definitely trade platinum. Like, platinum is, it's kind of like silver, you know, it can be a little bit too big for certain sized accounts. Gold, let's have a look at gold, since we're on the precious metal side. All right, so gold does have a gamma wall right at this level at 3360. So let's turn our attention to gold. This is a monthly chart. We're still in that distribution story, so we don't have a higher high. We have a double top from the previous month and the current month. Let's see what the weekly chart says. Again, a bit sideways, right, with a skew upside. So not much to glean from that. The range that we're working with is 3540 and 3152, let's say. There is a localized demand here, but it's more of a range than a good quality demand. With where we are on the weekly chart, sort of in the middle of the range, wouldn't be surprised if it tries to rotate all the way to the bottom of that range before they carry on. And it's attempting to turn around, but this is all Asia. Typically what happens intra-session or in between the sessions, more accurately, would be to have some sort of a reversal and then maybe a continuation. So perhaps we can use that 3360 area as an orientation point. If it goes higher, yeah, maybe we have more upside on the cards, because we do have a bit of a flimsy reversal here that is not finished, because today's candle is still subject to change. So if you're basing your analysis on something that is not printed, done and dusted, that tends to introduce problems, because it can change, right? It's not a factual reversal yet. So yeah, I would use 3360 as an orientation point. And then maybe look at a 30-minute chart. So let's just do a little coordinate entry here. White line to delineate the options levels. So this is a gamma wall here. And, you know, in anything else, it could be a bit difficult to break. But this is gold we're talking about. It's just been screaming higher and higher and higher, without much regard to anybody's opinion. Now, what do we have when it comes to value areas and all that good stuff? Now, I'm going to give you COMEX values, because obviously that is the main session for this particular product. So COMEX value high, currently sitting at 33.47. And for that, I'm going to be using a 30-minute chart. So we're not too far away from it. We're far enough away that if 3360 holds and we get to COMEX, we could see the reversal. So mean reversion down, effectively like a gap fill down to value. So I'm just going to mark that COMEX value high. And then value low, where is that? 3332.2. It's quite specific. And there's COMEX, value low. And since I'm doing this, we might as well look at the quantitative extremes as well. The full ADR high, as it stands right now, to the upside, is actually sitting at 33.86, let's say. So what is the quantitative extreme? It is the projected range that we would expect the price to at least get to. It's a statistical measure of the previous sort of 10 days average movement. So there is a very good chance that we reach that as well, especially if 3360 doesn't give us that ceiling. And right now they keep trying. It's not terribly quick price action, so there is still a chance that this fails. But at the moment, I would not bet on that, because again, gold, very, very strong uptrend. And yes, we sort of slowed down, but anytime we think, oh yeah, it slowed down, it just screams back up. So it's like, wow. So we have to have hypos for both sides of the story. Now to the downside. Oh god, these are big ranges. So 3317.5 is the exhaustion to the downside. And the way I'm looking at this, we're kind of in the middle of nowhere. The best setups that I find work for me is when one of these strong sort of gamma balls, call resistance levels, when it lines up with a quantitative extreme. So it's like, let's say, instead of gamma wall being at 3360, that is kind of like somewhere at 3380, and then I have a pretty tight zone where probabilities are increased for reversal, because you have two separate concepts telling you the same thing. One is the exhaustion, the other one is the gamma wall from the options levels. And whenever we're far away, and the same thing with value areas, you know, if we have an important, let's say, put support or something around 3340, that would make it more likely that COMEX value high reacts to the upside as a reversal from the value area. If you don't have that, everything's sort of like up in the air. However, having said that, I don't know why that number stuck with me. It's probably because it was there last time. 3340 is actually a put support on gold. So I mean, I would argue this is a little bit too deep into value for my liking, but it is a major level. So if you want to avoid stupid trades, you only want to focus on the strong, effectively extremes of these levels. So value area is a distribution curve. Whenever we go too far away from it, and ideally to the ADR high, it tends to bring a mean reversion into the mix. If you're, for example, getting down to the put support, but you still have quite a bit of room to the downside, again, that introduces a little bit of ick factor in the setup, because you only have the put support, and it still might work, but you then have to, you know, you have to like stare at the price action and make sure that it will turn around. And even then, you really need a good push. Like, you can't just go, oh yeah, 5-minute chart, one green bar, let's go. It really has to spend time reversing away from it. So I like to use at least a 15-minute time frame, and I want it to be like an unequivocal bullish engulfing that closes above the previous candle high. So what does that mean? It means it would look something like this. I differentiate between strong and weak patterns. So this is a strong pattern, strong reversal, 2-bar reversal. Why? Because this candle went higher. Doesn't have much of a selling wick either, so it's pretty strong. And that's what you want to see if you're looking for real reversals. Now, on the other hand, this one did bring a nice pump, but it's a weak one. Why? Because if you look at it this way, even though this is more, I would classify it more as a morning star rather than a 2-bar reversal, but just imagine this was like a little black candle. This candle did not close above the previous candle high, so that weakens the pattern. It still might work, and it's quite wicky, so I don't like those sorts of patterns, but anything of that sort, when you see it on a 15 or 30-minute chart, providing that this second candle is not super massive the super massive candle, then you have a very good chance that this is a strong reversal at this area. And then if you have a good level there, all of it just increases your confidence that yes, this is the setup we're looking for. And again, not foolproof, nothing works 100%, but it just stops you from going into trades that did not give you a good price action and did not close the way you expected it to. So if this one had closed with a selling wick that is at least sort of 40-50% of the entire length of the candle, that will be weak. So at that point, it doesn't matter where the candle is closing. The selling wick is going to weaken the reversal because it means there are some sellers there, right? It's a pretty basic concept. So yeah, hopefully that helps, to kind of filter out some of your trades. And I know that many of you are staring at 100 tick chart. There is a use for that, but you can't read a 100 tick chart the same way. This is exactly the reason why I have my ribbon, where I'm looking for the overall movement in a different way, and I can explain to you how. Like, for example, if you have a 100 tick chart that smashes below the ribbon and holds below it, that means that we might have some change in sentiment. Now, this one is not strong. Why? Because we barely went below the ribbon, and we also never went below the gamma wall. So right now, there's still some strength here. Would not touch this with a barge pole. And until that changes, you can flip, maybe, like if you just use the options levels, maybe you can go, well, actually gamma wall is still bringing us some buyers, so maybe I can position myself long. But then you get into the territory of flipping and flopping. It's like, I would be short, I would be long. The best trades that you can have are the ones where you have different levels, where you either want to be a buyer or a seller, but not the same at the same level. Or I'm either going to be a buyer or a seller, depends on what happens. No, you can say you want to be a buyer somewhere in this area. Pretty wide area, I know, but it still makes, the definition of I'm not selling here, I'm just going to buy here. And then you can also say, well, I want to be a seller up here. And then depending on what you think is happening on the larger time frame, you might decide to be either a buyer or a seller here, but not both. So let's say I would probably want to be a seller if, again, note the if, the conditional logic, if it goes below 33.60 and gives me a strong bearish engulfing. If it goes higher, I don't want it. I don't care that it works. I'm not going to FOMO about it because it's not a part of my plan. And likewise on crude oil, I want to be a buyer here. And until that completely changes, like maybe I want to be a seller somewhere up at 68. Because, at 68, we have the ADR high, 68.58 actually. So we can move that. So roughly 68.60. If we ever get up there, whether I'm on it or not, it makes zero difference. But I want to be a seller maybe up here. However, since we're coming from a daily demand, if this ever starts to go higher, going against the move that is rejecting a daily demand, it doesn't normally end well. And obviously being a Thursday, we could have a single direction day. Which direction, I don't know. I think is going to be long, but I might be wrong, right? So I have about 43% accuracy over many years. So yeah, I am wrong a lot, and I'm totally cool with that, because once I'm right, I capture anywhere from like 6R up to sometimes even crazy like 10 Rs and stuff, but not very often. 5 to 6R would be more likely for a swing for me. So yeah, I'm kind of not bothered by what happens elsewhere. But if we're in the middles, I will absolutely do smaller trades. I will take a 35 tick trade for sure. All right, let's have a look at some more questions. Bryant Waxer says, morning, did you find RBOB and CL move together? They are very correlated. Do they move in like 100% unison? No. Usually one of them will be either stronger or weaker on the day. Okay. Now let's have a look at RBOB here. Oh, Robert. And let's also go to a 30-minute chart just to see exactly which one is moving. I also need the initial balance just to have a measure of how much we've extended. Oops. Press the wrong button there. Let's try that again. What did I press? I think I pressed the back button on my mouse by accident. Did not want to do that. Okay. Start that again. Do we see either one of these being stronger? I would say they're pretty equal right now. It's like they're a bit twinsies. Depending on how they continue this movement, you know, whether one of them leaves single prints or not, the other one just kind of, but you know, crude oil tends to be slower. However, on some days there will be a more pronounced momentum in the same direction by, let's say, crude oil. So crude oil will have the single prints, whereas RBOB is just like, no, I think I'm right here. But yeah, they are very correlated, with RBOB being a lot more crazy because it's a faster product. It's a very thin product, so there's not that many people trading it. If I go into RBOB Dome, you will see that it's very patchy, and this is why I don't like to trade it during London. I want this to populate a little bit, and I almost exclusively trade RBOB very late in the day. So I will typically trade it into the euro close, and then for the last 90 minutes of the NYMEX session. And if we look at crude oil, you will see that whilst it's not exactly screaming at this point, it does have, you know, it does have some contracts there. There's certainly no big gaps where there's nothing. Oh look, one, nothing. Like that's what our RBOB looks like. So yeah, crude oil much thicker, albeit still a thinner market than, you know, something like ES. But yeah, we do have some liquidity here at 64.79. I thought we were there already. Yeah, they just have buyers waiting there. So we'll see. Yeah. And again, we have liquidity to both sides. We have liquidity at 64.79. We also have it at 66. So there's not much to glean from here. Okay, so now that you're seeing RBOB popping up a little bit, but crude oil isn't, that means for now, RBOB is trying to make itself into a slightly stronger movement to the upside. Sometimes it pulls crude oil, but there's this thing called the crack spread, which uses, and no, not that kind of crack. So it's CRK, and it uses heating oil, RBOB, and crude oil in a very particular ratio. And you don't do that on intraday accounts. That is like more like spread trading. And then you're aiming to effectively create a spread that will benefit from the differential between the three products, from like that triangulation of a finished product and then two raw materials, if that makes sense. But you don't need to do that. Like, you can just trade Bob. Technically, you don't need to know about the crack spread. You can find perfectly good setups even without it. It's just something interesting to note. So yeah. I mean, so far it's not really screaming either side. We're below the initial balance. I don't like that. And we are still building structure because we have C period that went down. D period did not make a lower low. E period now is building a 3 TPO structure here, trying to extend again. Hardly screaming down. Not that. Actually, let me have a look at where the 4-hour range is, because that might be helpful here. We can maybe adjust in a better position. So let's just kill this for now. I was gonna freak out because I couldn't see my trade, and I'm like, no, D, you're on micros. Oh, now they're buying it again. Okay, let me have a look at bookmap actually, because it might provide me a little bit more information. We're at 0 cumulative volume delta. Yeah, I'm gonna wait. And we also have HVL at 64.75. So yeah, I'm not gonna bail just yet, because we got a wedged in between 2 big levels. Core resistance and HVL are like just here. So until that entire zone goes, I can't grasshopper out. MDB says, good morning, D. Nice setup on CL. We'll see. Would this also apply to NG? Current level 355 looks a bit support-ish. What do you think? NG, this is not the product, and NG just rolled as well. So I would not be trading it today, purely because of that. I'm pretty sure we rolled into Q. So let's see what the levels are saying. But usually natural gas is pretty dead on most days until we get to this falling, okay. Until we get to about 11 o'clock, maybe 12 o'clock my time, which is in an hour or two. That's when the United States wakes up, and then they start going, hey, let's see if we can find a setup here in natural gas. But until that time, you're likely to be watching paint dry, and then as soon as overlap comes, they like to reverse it, or at least NYMEX comes, and they just completely reverse the sentiment on most days. So it's completely pointless. You will be like watching the price, in a very tight range of like, what is this? Let me get my measuring tool. Measuring tool. Yeah, I need to change contract as well. Hold up. So we're currently working with a 14 tick range for London. I mean, wow, that's quite the range. An initial balance size of 8 ticks. So yeah, watching paint dry doesn't even begin to explain this price action. I wouldn't call this support-ish. I would call this out of hours trading and a random walk. So 2 very different things. So consolidations are the strongest when they're happening during active trading hours, because there's a lot of volume trading, right? And yet they're not able to move the price to new levels. That's what matters. When something is having lack of interest and everybody who trades that is asleep and nobody really is interested to put any active positions, that's not the same thing. That's like nobody's trading it, right? Very, very different than active hours, consolidation, and price agreement, and then an engulfing finisher, you know, resolution to the opposite side, and then maybe you can fish for reversals. But natural gas, I just leave this alone for now. Deep stop diving. Do you use the indices as an entry confirmation for GC, or are you just guessing bias? Contrary to popular belief, since COVID, the negative correlation between equities and gold has broken down. So not very useful if you're going to base your decisions on whatever equities are doing, because the only time gold and equities these days are moving in the opposite direction is if you have war news or political instability or something to do with like monetary policies or something. But for all of the other days when we have like normal days, we don't have the Fed rate decision and, you know, everything's fine. They kind of go in completely opposite directions, or they don't have any connection whatsoever. So be very careful with correlations. They used to be, it used to be like the traditional portfolio theory that we would have gold going up at times of uncertainty and equities, you know, either staying and, you know, falling because people are bailing from equities and going into safe haven markets, which traditionally used to be gold. But now we have Bitcoin, and that, I think that put a wrench in the works in the traditional correlations, because now, whilst gold is still considered a safe haven, I'm seeing things in copper and platinum that are behaving like a safe haven, right? It's like platinum, rare metal that, like, really? And then copper now is being used as a protection from inflation over gold. And gold traditionally used to be used for the same purpose. So is it because gold is so high up? I don't know, maybe. But either way, it's pretty interesting. Just don't get stuck in the old way of thinking about correlations, because they do change. And, you know, during COVID, everybody expected that gold is just going to keep going up, up, and up. And then equities and gold started falling in unison. And we're like, what? But it's semi-apocalypse. Maybe real apocalypse. I'm thinking of getting a machete and some, you know, leather shoulder pauldrons, Mad Max style. Little did I know that the apocalypse in modern times just involved wearing your PJs and being depressed at home. But hey. So yeah, that broke down during COVID, never quite came back. Like I said, anytime we have any sort of inflation news, they tend to go into copper. It's, you know, it's a strange development, but those are the times we live in. How did Mick say it? Adapt to die. Flash golden is just a sweep on gold. I would disagree if this holds below 33.57, because we do have a gamma wall. Gamma wall tends to be very, very strong, and if they can't hold above it pretty much in the first try, that becomes very dangerous. If this ends up a strong bearish engulfing pattern on a 30-minute chart, that is definitely a reversal from the gamma wall. And if you can somehow catch this on a lower risk while still not breaking the structure, good luck. But for me, gold has, like, I would probably have to trade peanuts on gold. To be really safe, your stop would need to go at 33.67 for a real swing down. That's a crazy amount of ticks. And currently, that would mean using nearly like half of the London session range. So from a number of technical and system design perspectives, I'm not interested in gold. Jake says 33.62.7 was POC. Yeah, that's also confluence, right? If you have especially a large time frame POC, there's definitely something to consider. And you know me with the profile. Anything related to the profile is actually related to how the market traded there. So, yeah. Flash Golden says, nice measuring there, lass. Glad you like my measuring tools. Yeah. Maybe switch from micros. You mean to micros. Even to micros, unless I can get three quarters of the available range for the current session, what good would that do? So if you have to use, if the structure is telling you have to use like 110, 120 tick stop, which is insane, but London only has 240 ticks available on average, what does that do to the trade? Come on, pop quiz. Pop quiz. No? Nothing? It means that you won't have a statistically viable target because you need to have 2R, 3R in the way that I teach people to keep everything stable. If you're using a stop loss that is so large because of what's happening, and it's like falling out of bed now, you're not going to have enough space statistically to run your hypothesis with a positive expectancy and a positive risk reward. And also, that kind of tells you that unless you caught it by guessing up top that maybe gamma ball, I mean, you might front run a trade, you know, that's absolutely something that you can do. I mean, I'm front running this crude oil trade, right? But I'm a little bit more, you know, confident in that. Why? Because we have the 4-hour sideways movement, right? Is this the right time for crude oil? Nah, I don't know. It's London, so it can move. Sometimes it moves, sometimes it doesn't move. And crude oil is a fickle beast, you know. One day it runs for, it used to be like 200 last year, and that used to be considered a big day. But back when I was actively trading it, like 350 was a normal day. If you would have like anything less than that, you would be like, it's quiet. Like, what's happening? But yeah, so I'm kind of willing to give this more time rather than guessing that in an uptrend, gamma wall may or may not work. So I don't like front running things that have a slightly lower expectancy, and also then do this like massive jump off a cliff, completely engulfing all of the other trending candles, which is an outlier move. So now if you go short, you're actually in danger of them pinging it back up intra candle, and then you're going to find yourself in a drawdown. So like from all sorts of perspectives, to me this would be a little unplayable. That's why, you know, I'm very careful with gold and when I'm trading it. And for me, gold is really post 3 p.m. setups only, not, you know, not during London. When most times we actually have a very quiet period in the first 2-3 hours of London, and things only kind of start livening up during the overlap. So yeah. Brandon Baker says, I luckily caught the short at 33.62. Well done. Good trade. What do you think about copper? Right now, nothing, because again, it just rolled yesterday. So I don't want to touch it until the rollover is definitely done. Probably going to chill. This is why I'm on crude oil, because I'm trying to stay away from contracts in rollover. And then next week we're going to get back to copper and see what it does. So yeah. I'm also restarting my Tuesday live sessions on my own channel. We just did one on Tuesday. Yeah. Dude. So yeah, don't think of anything with copper until it's done the nonsense of rollover, because it can go crazy, it can be range bound, and any kind of technicals that you have, it doesn't seem to respect it during rollover. And if you're someone who likes to listen to Hogue, the way they used to tackle rollover in the pits, they used to sit down and play cards until it's done. Like, you just know it's not a good time. And no matter what happens, it's still not a good time, because you get outlier days or you get days when you're just watching paint dry. So either side is not that great. What is a gamma wall? A gamma wall is a level with a lot of interest from the options activity, where market makers will be forced to adjust inventory in order to maintain their market neutral stance. does that make more sense? Because what is market neutral, and what do market makers do? They need to maintain market neutral sentiment. They're not there to push the market in any particular direction. They're there to make sure that the inventory stays at a particular level. It doesn't go completely crazy. So if you look at the options activity, there are these levels with a lot of interest where the level represents a danger to the market neutral sentiment that they have to maintain. So therefore, when they get up to those levels, usually it's very difficult to pass through them. And this is where the market makers plow in with their big size and adjust inventory, which is why you see things like this happening. And, if we have a good gamma wall, that's an excellent level to either take profits or maybe look to start new trades. And in fact, if you have the patience to only ever get involved around gamma levels, your results would look pretty good, right? No matter what your style is, because they're super, super strong levels that carry weight in the actual options market that moves the price intraday. So yeah, on crude oil, we have a gamma wall. Let's have a look. I think it was up at, so the gamma wall for crude oil today is 66.25. And we have a former kind of core resistance at 65. But 66.25 is the logical conclusion to the up move if we ever get one. We have an HVL, which is again high volume level, where gamma exposure can flip from negative to positive and positive to negative. And then when you're in a positive gamma, you can expect some of these levels that we're coming up against to act. Price basically goes through them or goes down to them and then bounces if we're in sort of a negative gamma. But it also has like implications for volatility. Are we in a highly volatile situation or not? HVL, when we cross over it, can actually change that. So if we've been in a quiet time of day and then we run into an HVL, go through it, the market makers might just wake up because that's where the sentiment changes. And it's kind of like think of it as a seesaw. It's like up to here, we're going to be quiet. From here on out, we go crazy. But HVLs on a first test usually bring some sort of a bounce. And it's literally at the same area as the London value low. So again, I'm willing to stick it out and see what they want to do, especially seeing how the gamma wall is higher up. So yeah. And again, it still might not work. It might be too early. I might be looking at 64 as an actual bounce level. That's where put support is. So that's another strong level. So if I don't get this one, I might just wait it out, or I might just finish the week and not trade tomorrow. So just have a bit of a day off. We don't have to trade every day, For the long run says, do you have a channel? I did not know that. Yeah, I had a channel that wasn't particularly active, but I made my channel in 2015. And if you scroll back far enough, you will see me when I was still a rock musician. So I was in prop, and they didn't care about crazy hair colors. So I just went in with massive purple hair and like emo looking. But I still had that. And that's the first ever, entrance into trading and speaking on camera and stuff, because I as a musician, you don't necessarily have to speak. You just either sing the lyrics or play the sax and guitar. Nobody asks you to speak. And sure, you would have interviews, but then you would have another person that's asking you questions, whereas this thing it was so bloody weird for me. And you can see how shy I am. I had been in Chicago, so my accent is all screwed up, and I'm saying things like demand and supply. Like I just picked up a whole bunch of weird accents from people who were there. And it was it's so funny to see me the way I used to be. I look really shy. I was like, hello traders, good morning. Today we're going to be talking about supply and demand. And every time I look at it, I was like, "Aw, young D." I mean, I wasn't that young. I was 35, but I looked much younger than I look now, so even though I still don't look super old. Thank God for that. Anyways, yeah, so I made my channel in 2015, made a couple of videos, but I wasn't, it wasn't a thing back then. It wasn't like, oh yeah, let's do live streaming. And first of all, I don't think live streams were any kind of quality, and they didn't even exist, if I remember correctly. You could do long forms, shorts didn't exist, live didn't exist. So the only thing you could do is just put on your camera, pre-record a video, and then upload it. It wasn't really until COVID that I started taking that channel a little bit more seriously, because I was mainly bored, and the prop firm that I worked at closed their doors. So I was like, okay, now what? And I decided to start making engaging, fun videos and sharing my knowledge, and just trying to be a bit more proactive. And that carried on until probably about 2023. Yeah, and then I got really sick, so yeah, so I had to stop. And after that, literally the same year, I kind of found a treatment that worked for me, and then started feeling a little bit better, but not enough to, constantly churn out daily streams of my own, and constantly create new scripts with new videos every week and stuff. It just became really difficult. So when Topstep approached me to be on their new channel, and again, I've known Topstep guys for 10 years at that point. Me and Hogue were friends already. I've done content for them, like some panels and stuff before. Obviously, I was a part of Squawk Radio back in the day, not like a regular part, but I was a pretty regular guest, because I was a funded trader even then. In fact, I was the first female trader to get funded at Topstep. Don't know how much weight that carries, but there you go. And so they approached me, and the deal back then was twice a week. I was in fast markets, and I was like, yeah, I could do twice a week. Yeah, I think my energy levels will hold up. And it really wasn't until I think about 8-9 months into it when I got even better. And then they were like, hey, do you want to run the London show? And I was like, if we get DAX, I will. And they said, well, let's just try and run it anyways. And here we are, a year later, still no DAX. So now we're stuck trading crude oil, copper, and as Mick put it, D, you trade the weirdest things. And yeah, because I don't have DAX, do I? But yeah, I don't think Mick has seen too many people trading RBOB. I think we have like 5 people trading RBOB, and that's mainly because of me. Because I said, I like RBOB over crude oil. And then some people tried it, they liked it, and now they're trading it too. So go market stalkers. Shy and glasses are my weakness growing up. Yeah, I didn't need glasses back then, because I did my LASIK surgery in 2010. I was blind as a bat before then, but just like a hugely short-sighted person. But then, yeah, LASIK was the best thing I did. So I didn't need glasses. So these are reading glasses, because I noticed, I'm getting to the age where like you're trying to read something really close up, and then you keep doing this. It's like, what's that all about? And yeah, it's just the eye muscle getting weaker. I'm actually thinking of growing out the gray hair, because I'm getting really sick and tired of dyeing it. Like, it's such a chore. I'm very salt and pepper now, and it's probably going to look terrible for quite a while. I'm going to look like Granny D. Hello. Maybe I should do some knitting over here. But yeah, I'm seriously considering growing out my gray hair. I live in the countryside now, so I might as well look it, right? But just you wait. It's gonna like start growing out a little bit, and I'm gonna hate it and dye it right back. Yeah, Rigoberto, please stop it with questions about why you should join Topstep. Either just join or don't join. Like, you know, you come in here every single day and you're always asking the same question. Why should I join Topstep? It's like, you're on a TopstepTV channel. I'm here because I love Topstep, because I love the company. They've been around the longest. They are the pioneers of the industry. You know, they're stable. They know what they're doing with their math. And they're innovative. It's like, you know, if you don't like that, just try it. If you don't like it, go somewhere else. But yeah, just don't keep coming here. I'm starting to think that you're a bot of some sort. Yeah, Topstep providing 50% of the RPOP volume. For those of us who are live, yeah, I'm probably providing 50% in my live account. Like, there goes D again. Yeah. Long RBOB at 6:30 p.m. Or short RBOB. You can see me. There she is. Because I usually trade it around about the same time, which would be like I said, either Euro close or right after Euro close or 90 minutes into the end of NYMEX. T3 Metric says, oh my god, I have the grandma eyes thing going on. I'm 46. Yeah, so you're only a year older than me, because I'm 1980, but I was born in December. So obviously, you know, I'm still 44, but I will be 45 this year. And I noticed the eyes like about 2 years ago when I was like 42, 43. I was like, this is new. And I know what it looks like when you can't see well. It's just I've always been able to see really close up, because I had like -6.5. Where I was so blind. It was ridiculous. And then I remember like trying to read something, and you know, without the glasses, I would have to like be here, and that's when I would see it like properly. And now I'm doing the opposite. You know, I'm kind of like, out of habit, I'm kind of putting it quite close, but then I'm going, oh, that's it. And if there's no light, just forget about it. I can't see squat, right? Like, just nothing. So yeah, I decided to, these are like super cheap reading glasses. They're like, I think they were like 20 pounds or something. It's like terrible. But I do need, I'm considering getting like proper reading glasses at some point. These will do for now. They're fine. So yeah. And especially if I'm playing video games as well. I remember playing Assassin's Creed, and I'm like, why is that? And I have, you know, I do have a big TV, but usually I'm quite far away. So I remember playing Assassin's Creed, and they have, I have a PS5, and then the letters are really small, and I remember thinking, why are the letters double? So one of my eyes is slightly into the minus, but my left eye has completely gone into the plus. So this eye is I think it's +1, and this one is -0.5, and that causes so many issues with distance and close up. But because I can see slightly better further away, it's not so bad. But reading, oh my god, like I remember trying to read prices, and Hogue was like, oh, what do you think about this area? And I'm like, like, what is that number? And I just couldn't see. Like, I actually had to kind of just go, how do I make this bigger? And then I had to go to another platform that has like bigger fonts, and I'm like, oh, okay. So yeah, it is becoming a bit of a problem for sure. Andrew says, your eyes aren't bad, your arms aren't long enough. That's true. You know, I'm a midget. I'm only like 5'1" on a good day. If you measure me like throughout the day, it's probably going to be like 5'3". But yeah, little people, yes, very, very tiny, always have been. Which is why it's so funny, you know, some people, we get trolls here, right? And they're like teasing all of us, and you know, if they knew how tiny I was, it's like, well done, mate, you're teasing a 5-foot person. You know, slow clap. Not that it's like a disability or anything. It's just pathetic. It's like, I'm so tiny. Like I have a sharp tongue. I can clap back when necessary. But in general, I can imagine that these men, and it's always men for some reason, that they're like 6 foot, and they're like, I'm gonna come and troll D. It's like, be my guest, man. I couldn't care less. Jim says, don't do that. Your young face wouldn't go with gray hair. You look great. Don't mess with a good thing. So, you see, I have a theory. You know how all the young chicks now, they're like 23, 25, they all have like gray hair because they dye it. I was thinking that maybe because I still look young, I might be able to get away with it and kind of look really cool. And at the same time, I kind of want to have a crazy hair color. But I tried going back to my red. It did not work with my current face. Something's changed. Like when I was younger, I used to have a darker complexion. And then as I aged, I also lost some puppy fat from my cheeks. So suddenly I look, about mid-30s, I would say. I wouldn't say that I look like, the lights forgive a lot. If you meet me in real life and it's like daytime, you can definitely see more of the age. Like I do have some wrinkles here and stuff. And not that I care, but you can see that I'm not 25. And then I was thinking, well, if I let it grow out gray and I still have a relatively young face, maybe that would look pretty cool. Maybe I can look all edgy and shit. I don't know. But if I do age, like let's say in 5 years time I get to 50 and my face is a bit more wrinkly, maybe I'm like, ew, dye it back immediately. But I think I could probably get away with gray hair. I don't know. Maybe I'll try it. Do you know what? There's like temporary hair dyes that I can do whilst I'm growing out my hair. So if I don't like it, obviously I can always dye it back. But you can't just grow it out all at once, unless I go somewhere to fry my hair completely and just get gray immediately. I don't know. Is that a thing? I don't go to the hairdressers. That's when my hair looks like shit all the time. So yeah. Five Panda says, it's very hard to tell people's height on white tea. Yeah, and you always think we don't have legs. Johnny has a question. D, where do you get the option data for commodity futures? So here's the thing. You can get all of this data directly on the CME website if you go to options, but it's obviously just a table. It takes time to sift through all of the levels. It's like, oh, which one is which? I don't know. Especially if you have like multiple levels. It's like, okay, this one's the strongest. It just takes time. So I use MentorQ. I'm going to put it in the chat. MentorQ. I have done webinars with them. I'm not their affiliate. I'm more their friend because we know each other. Fabio is a great guy. He used to work for Bloomberg. He comes from the institutional background. And yeah, so he's decided to create this brilliant service where he aggregates the options data that you can get elsewhere, and then he puts it in a very simplified way. You can also have a look at the profile for the day, like how much volatility, what is the implied volatility, are we in a positive or negative gamma environment. But most importantly, he has put everything down to a single line on the chart. It's brilliant, right? It simplifies everything because ultimately it's just another level. It is an important level for sure that carries like market maker activities inside it, but nonetheless it is just a level. So me not having to spend like half an hour or an hour if I'm going to do all of my products that I look at, just kind of going through individual options matrices, I just literally put their indicator on, load up the new day, so it's end of day levels from the previous day, and it works. So yeah. So check it out, MentorQ. James Hanson, damn it, went long MNQ instead of NQ. Oh, hey, it could be worse. You could have wanted to go long MNQ, but you end up longing NQ, right? So I reckon smaller size is always okay, as long as it's not like 1. Is it 1? It's gonna be 1, isn't it? But hey, maybe you make a few bucks, get a Happy Meal or something, right? What future is this? Do I not have... I do have the watermark, but it's not very strong, actually. Good point there. I'm going to try and make it a bit better. Now let's make it lighter. Is that too much? Might be a bit too much. Let's try it. Opacity. Is that better? Can you guys see that now? James Hansen, the volatility sucks at the moment. I dislike summer trading. You know, I like summer trading. I think it's very calm. And typically I do pretty well during the summers. Obviously, if we have some movement. If we have no movement and everything is like stuck in a 30 tick range, yeah, that's a bit tricky. But yeah, I kind of like when we still have slower action, but there's still some action. Granted, when we get to halfway through July, if no headline risk is happening, then it will get a bit dull. And I used to go like on vacations, holidays throughout most of August, because it used to be so quiet. It's like you would try to trade and it'd just be like watching paint dry, but that hasn't been the case for a while now. It just that we just don't seem to get proper summer trading. Like there's like a couple of days when it's a little bit quiet, then it livens up again. So, you know. Come on, crude oil, get over 65. See, one great thing about my own live streams, I can vape. I'm actually dying for a vape right now, but I'm not going to do it because we're on TopstepTV and we're trying to be good examples, right? Even though Doom has his Rolly. He's such a cool guy. I love Doom. How do I add the dome as a column in Topstep? It won't fix as a column. Okay, let's go through that. So I'm going to get rid of the dome, or dom. Add components. Click and hold, then drag it until you see this little thing pop up. And then you have to line it up with the arrow and then drop. Okay, do you want me to do that again? Let's do it again. So you drag out the components, click and hold the mouse, so don't let go. Then drag it until you see the arrows pop up. And then you line it up with the arrow, which lines it up to where you want it on the screen. Let go. Okay? And it always starts on ES, like every time. Do I even have ES? I didn't... Yeah, I don't even have ES, so that's weird. It's just ultra weird. Because I don't pay for it, right? I do not pay for equities. I pay for YM, but I don't pay for... I don't pay for NQ or ES on this account. Why block the account balance? Why are you afraid of being transparent? I'm not afraid of it. I'm just trying not to base my opinions and my P&L on the account balance. I don't care what my account balance is, frankly. And also there will be times when I take payouts, so therefore the account balance changes drastically. Sometimes it changes between like plus minus 5k, plus minus 15k. And it's just confusing for people, because sometimes you see people on the leaderboards and stuff, and you're like, well, how come they say he's made 200 grand, but he's only got 50 grand in the account balance? Like, where's the rest of it? in the pocket. So it just makes it less confusing for people. So most of us will try to not confuse people by not focusing on the balance necessarily, but also not having to declare every time we take a payout, right? And then having to justify why the balance is, more or less or this or that. So it just kind of stops the confusion. And that's also the same reason why the house account will not have a balance. There's also another reason. The house account is actually shared between all of the hosts, and as in like different accounts. So, JD has a live account. Dolby has a live account, but it's all a part of the same pool, and then they all kind of aggregate and collate the balance, if that makes sense. So, yeah. So it's not about not being transparent. It's about not focusing on the P&L and not confusing people with payouts and stuff and going, oh, what happened? It's like nothing happened. It's just you keep a certain amount in a prop account, and anything over a certain amount you take out. So even though technically, before I even got into this live account, I took out 15 grand before they moved me. That won't be included in the account balance at all. So it would be much lower than that, right? Because that's already in my pocket. Henrix, no, I don't. If you want that, like, first of all, I'm not going to be strong-armed into, sure, account balance. No, I'm in a live trade, mate. Okay? I'm in a live trade. I do not want my decisions impacting me seeing my account balance go up and down. I want to be focused on this trade now. If you don't understand that, maybe go somewhere else. There we go. I've shown my account balance before. It's like, there's nothing hidden about it. But when I'm in a live trade, I'm not going to be messing around with showing balances and then allowing that to impact my decisions, or going, oh, it's not enough, oh yeah, I've only made 600, or let me try and make 2 grand, because that does happen to me still, because I'm used to making a certain amount in my other accounts. This one is a smaller account, and I shoot anywhere from 400 to 600, maybe a grand, maybe 2 grand on some days, but that would be more of an outlier because the position sizes that are smaller, right? So whilst I'm in a live account, just leave me alone, okay? I'm in a live trade, I'm tracking it. I do not want my attention diluted by somebody going, show your account balance. No. Does the volume profile fixed range help you to know where prices should go? I don't use the volume profile fixed range. I use the volume profile visible range, and then I use market profile, which is actually on my other platform here. These are my indicators. So this was the setup from yesterday. Stop, run, and reverse. So we've done that. This is a TPO profile. And actually, I'm going to change it back to London. So here I can see where we are opening, what we're doing, but it's just a tool. The market is not going to, like, just because you have market profile on your chart or volume profile, it won't tell you exactly where the market will go. You can have a high and low volume nodes, and you can have a high volume node here, high volume node there, but it's like, where do we go? Do we go higher? Do we go lower? That's why you have to look at real-time price action. And it's not one of the, that's where the skill lies. I wish that it was just like simple as, oh, we have the value area higher up, or we have high volume node higher up. That's where it's going to go. It's to do with looking at the strength or weakness around certain levels, and then you deciding which side has more probability of working out. Otherwise, it's like, it's just you trying to play psychic, I suppose. And that's not what it's all about. We're not trying to predict anything. We're trying to take the factual detail of where we are in relation to the value area, in relation to the gamma wall, in relation to, a whole bunch of things, Globac's VWAP, for example. And then just kind of going, which side it looks stronger right now. And what makes more sense. Now, obviously, some probabilities and backtests and experience will play into that quite a lot. So the more you can define your playbooks, the better you'll be off. But the better off you will be. Speak English, Dee. But generally, it does give you, like, if you have enough knowledge about it, it can give you an inkling of about 2 or 3 scenarios that are most likely to happen. And, you know, for me, for my playbooks, I probably have about 5 of them, maybe 6, and then alternatives and variations on them. But they're not, you know, there's not like a million setups. I can have a failed auction that is either playable or non-playable, and the failed auction can be either full, partial, or it can overshoot into a neutral day, at which point we then have another hypothesis. So the neutral day type extends the initial balance to both sides. What that means is there's a very high chance, especially if we're out of hours, that we're not really going to go much further than that. So anytime I see a neutral day type, I'm not that happy, especially if I'm looking for a swing. So I'm like, nah, now we're in a neutral day type. Now, that means that unless I get single prints to the opposite side, it's minimizing my profit expectation. Because neutral day is kind of like something pulling on both ends and having like an elastic band. And then when you let go of the elastic band, it goes to the middle, right? So it's the same thing. And then you can have a single direction day. So sustained auction in a single direction. We see equities doing that all the time. Whenever you see that, if it's a big, big day, don't try and short it. The only time I would try and short it is if the day is not super large and it's still sort of single direction, but it's not a mad trending day. It's just come up a little bit more than normal day. And then we kind of hit ATR high and we spend a little bit of time there. Maybe there's also a gamma wall and then it starts to turn around and starts going back the other way. That's very possible, right? But it minimizes what can happen, right? So if you have a mad trending day, usually it carries on into more of a mad trend. Neutral day, range-bound rules apply. The mean reversion back to value can also happen in the face of the, you know, sustained auction, so it can look like a sustained auction, but then you have a limited profit target. Value acceptance typically has its target the opposite side of value, which is what we've done in London. But I'm looking for a swing trade here, and ideally I'm looking for it in another session, in NYMEX session, because this is more of a swing trade now. We're coming from the test of a pretty good demand area. We spent 2 days in the same level, in and around 65. And that's why I'm in this long. Did the value show me that? Well, we actually opened slightly above value and then migrated to it, rotated through it, but the entire range is still just a range. Okay? Feels like the market is waiting for GDP later this morning. Yeah, GDP and crude oil, like it has a little bit of a movement, but it's not really a major release for crude oil. So that's more for gold, for equities. Even copper is like, it doesn't really react that much. Copper reacts to CPI and PPI. Like that's pretty lively. But otherwise, crude oil reacts to headline risk. It reacts to inventories reports. Can react to FOMC, but again, nowhere near the equities and gold. So I wouldn't say. I would say that inflation report probably has more impact than the GDP numbers on crude oil. So again, today, no notable releases that could impact crude oil super negatively so far, but let's wait until Trump wakes up and be like boo, and crude oil blah, like just bombs all over the floor. The indicator volume profit fixed range, what does that tell me? It can tell you the volume value, which is similar to the TPO value, but it uses volume instead of the TPO ticks and 30-minute time frames. But there is a way, like it calculates from the middle and then adds top and bottom until it gets to 70% of that value. Anyways, I'm not going to nerd out on you here, but basically it's similar to the TPO profile. However, for me, it has less resolution. It has just like a generalized area. You can't really see the initial balance. There is no real concept of single prints left behind. There is a concept of low volume areas left behind, but they tend to be a little bit different to the ones that I see on the TPO profiles. So for me, when it comes to really kind of fishing for good setups, I prefer to look at the TPO. Volume, for me, volume profile has two rows, and I do use a 4-week volume profile, so I'm going to just do it here quickly. So you can see this is a four-week volume profile. Where's the point of control? All the way up here. How many high volume areas do we have? Well, we have quite a few here, but the most important thing is that if we manage to get up here and get some traction, this is a low volume area. So if we are in a swing, you can look at this as a single print fade. And it's a structure that requires repair. Whether it gets repaired all at once or we kind of pop into it, then reverse and then carry on the next day, that's another matter. But ultimately, if we get any sort of strength after this accumulation of 2 days, we should be able to push through this relatively quickly. And, you know, relatively quickly could mean 2 days. And then where is the POC? All the way up here. Can we get there in one go? Well, we fell from there in one day, but can that happen again? Probably not. However, it is a natural stopping point to go back to that mean reversion to point of control, which is a nice, comfortable middle of the middle. So that's how I use it on large time frames. Now, I also have a use for it on a very low time frame. So let's have a look at it. Maybe on gold, because gold is moving a little bit more now. This is a 2-minute chart, and I do have my little ribbon here. That's my timing tool. If I'm looking for, let's say I'm looking for longs. I'm not, but let's, for the sake of, you know, hypothetical discussion, let's say we're looking for longs. This red line here is the volume POC on a very, very low time frame that only has this visible range. I will keep this on the chart and then maybe decide to go long only when this volume point of control starts moving higher and we're also back up against the ribbon. Okay? If we're just chopping in a range, which is what's happening now, we build volume in one area. The volume POC will not change. But then if I'm looking to go long, however, we get a nice drop below the ribbon and the volume point of control suddenly shifts lower, that will prevent me from going into a long, because it means that the low time frame volume POC is not conducive to what I'm trying to see and trying to do with the trade. So 2 ways of using it in the way I look at the use of volume profile, but it's just a tool, right? It's nothing more than a tool. It's not going to tell you whether to go long or short. It's going to maybe give you an inkling that some areas will, where in some areas the price will spend more time than in other areas. Why? Because low volume nodes, high volume nodes. That's how things are. The more trading that was done in a particular high volume area, it's going to be tougher to break through. So if you're trying to do breakouts from a high volume area or into the high volume area, probably not the best strategy. So that's where it can help you, but it's not going to tell you, hey, buy here, sell here. It's just a lens into the market behavior. That's all it is. Sid Moran, yes, I agree with you, but that's like a longer time frame. It is not intraday. GDP can be an indicator for future oil adjustments in prices, but when it comes to the actual release and you're trying to trade that, it's not a good release to trade intraday. So remember, we're talking intraday. This is not CNBC, right? Where we're like, yes, GDP will affect the oil prices. Yes, on a macro level, but you try and trade that intraday and you're not going to get that much out of it. I mean, sometimes it technically moves. It is Thursday, so we do have the options that expire bi-weekly on crude oil. And that could have an impact. It could be maybe the excuse to move it one way or the other. But is it a great release to trade on the day? Usually it's a bit of a nothing burger. You know, you're kind of expecting some massive movement in crude oil and you're like, but GDP. And it's like, yeah, nobody cares. And then in the following weeks, as the institutions are, you know, expressing their views in light of the leading indicators, they will be like, okay, now let's plow in, you know, 1 million barrels of crude oil in here. And then, you know, that becomes the new trend. But that's a macro trade. That is not an intraday trade. So don't mix up the two. Andrew says, oh, thank you. Your patience while in a trade is amazing. I'm getting better thanks to you and Jerome, but still a long way to go. You know, sometimes I wouldn't be this patient if it's a scalp, but I'm giving it a wide berth because this is a trade that could turn into a swing just based on everything that I've currently got. Doesn't mean I'm right, by no means, but if it does work, this could be one of those trades that carries on for the entire day. Okay? If it doesn't, it doesn't. It's cool. But the sheer risk-reward opportunity that I have on the table, this is why I'm waiting. And I am very patient in trades. Like Coach Hoop says, I hold trades longer than anyone. However, you have seen me do quicker trades here. You know, I grab $100 and I'm like, we're done. That's it for the day. It all depends on what we have. It all depends where we are chart location wise. But for me, yeah, I can sit in trades. Like, no problem at all. Sometimes I sit in trades that I shouldn't be sitting in. You know, that happens too. So my greatest strength is also my greatest weakness. So funny how that works. You guys only trade oil or also other futures. I trade copper, platinum, sometimes gold. Crude oil, again, I've just looked at it after a whole years of hiatus, and I popped in a couple of trades in crude. They both worked out, and I was like, man, is it back? I don't know. But I was a crude oil trader nearly exclusively for 12 years. I worked at an energy desk, so I traded natural gas, crude oil, but crude oil was by far the biggest. And I still trade natural gas, RBOB, which is gasoline futures, actually more favorite for me now than crude oil. And yeah, I trade precious metals, not all at once, obviously, but for every single week, I will have about 3 or 4 things that I might have my eye on. And then at any one point, I will have 1 or 2 active positions intraday. Right now, I only see crude oil positions, so I don't have a second one. But it's not odd to see D in like 1 natural gas trade and 1 copper trade simultaneously. So hopefully that helps. Anyways, we've come to the end. I'm going to sit in this trade and just give it time, give it room. It hasn't really done that much, but hey, at least we've climbed back up over 65. So remember, I'm looking for 65 to hold. Ideally, I would like this whole annoying 4-hour range to get busted. In order for that to happen, we need one of the 4-hour candles to close. To close above 65.50 with no selling wicks. So we tried that during Asia. But didn't quite get there. If it manages to achieve that, then the path to this swing upside towards the gamma wall that's currently sitting at 66.25, that becomes very possible. And my first target would be 66.25. Might trim off like 1 out of these 5, and then if it carries on higher, keeps pushing, maybe even hold it for the full ADR high. My dogs are saying it's time to go. Thank you so much for being here. I will see you again for lunchbox trading, because I'm on with Anne-Marie. Thank you for being here. This was TopstepTV, and Astrid is saying goodbye. Have a great rest of your day. Take care.